Hi, my name is Nur Amin Zafran bin Nur Muzaha.
And my name is Irfan Akil, and today we're going to present Introduction to Company Law.
The first outline is background of a company's existence as a business entity. Second, differences between sole proprietorship, partnership, and company. Third, concept of separate legal entity. Fourth, types of company. What is a company? A company is a separate body or corporation which is an artificial legal person that exists independently of the individuals who at any given time are the members of the corporate body, which means that incorporation will bring the effect of separate legal entity. Section 4, Substitute 1 of the Companies Act 1965 refers to a company incorporated pursuant to the Act or pursuant to any corresponding previous enactment. There are three types of company. The first one, a company limited by shares, a company limited by guarantee, a company limited both by shares and guarantee, or an unlimited company. Refer cases of Salomon versus Salomon and Company Limited 1987. Aaron Solomon was a successful leather merchant who specialized in manufacturing leather boots. For many years, he ran his business as a sole proprietorship. By 1982, his sons had become interested in taking part in the business. Solomon decided to incorporate his business as a limited company. At the time, the legal requirement for incorporation was that at least 7 persons subscribe as members of a company as shareholders. Mr. Solomon owned 20,001,000 of the company's 20,007 shares. The remaining 6 were shared individually between the other 6 shareholders, his wife, daughter, and 4 sons. Solomon sold his business to the new corporations for $39,000, which was an excessive price for its value, which the buyer gave $10,000 in debentures to Solomon. On the security of his debentures, Mr. Solomon received an advance of $5,000 from Edmund Broderick. Soon after, Solomon Incorporated business was beginning to decline and jeopardized his relation with Broderick. Then, Solomon's business failed, defaulting on its interest payment on the debentures. Broderick was repaid his $5,000, thus left the other unsecured creditors with an amount of $77773. When the company went into liquidation, the liquidator argued that the debentures used by Mr. Solomon as security for the debt were invalid and being sued on the grounds of fraud against its unsecured creditors. The court held that Mr. Solomon did not abuse the privilege of incorporations and limited liability, and rejecting the argument from agency and fraud. The court said that the company has a separate legal entity from its distant member, even that Mr. Solomon holds most of the shares in the company. it does not mean he should liable all his assets to the debts. Companies' debt are obligated by their own company, not by the members, and Mr. Solomon did not breach the Companies Act.
So, there are three types of business when forming a company, each with its own legal differences: sole proprietorship, partnership, and company. Sole proprietorship company is owned by one person. The capital comes from personal savings. The liability is unlimited because it involves personal property. Profit and loss is incurred by the owner, and the tax is paid by the individual. Next is partnership. Partnership company is owned more than one person and a maximum of 20 people. The capital derived from the partner contributions. The liability is unlimited because it involves personal property only. Profit and loss is distributed among the partners, and the tax is paid by the individual. Lastly is company. The number of ownership is no limit. The capital is derived from the sale of shares to the company members. Liability is unlimited as it does not involve the personal property. Profits are distributed to the shareholders in the form of dividends. And there are individual tax and also company income tax.
Concept of separate legal entity refer to the case of Solomon versus Solomon and Company Limited, that the company is a body corporate with the powers of an incorporated company. This is may sue and be sued, that is has perpetual successions.
There are four types of companies: private company, public company, limited company, and also unlimited company. A company having a share capital may be incorporated as a private company if its article contains, restricts the right to transfer its shares, prohibits any invitation to the public to subscribe for any shares in or debentures of the company, prohibits any invitation to the public to deposit money with the company. A public company is a company other than a private company. An exempt private company is a private company in the shares of which no beneficial interest is held directly or indirectly by any corporation and which has not more than 20 members. So there are two types of limited company: company limited by shares and by guarantee. A company limited by shares is when the liability of a member's contribution to the company's assets is limited to the amount, if any, unpaid on his shares. A company limited by guarantee is when one where the liability of members is limited to such amount as they have undertaken to contribute to the assets in the event of its being wound up. An unlimited company is a company formed on the principle of having no limit placed on the liability of its members. As for conclusion, the thing that we have discussed today is what is the definition of company, the differences between businesses, the concept of separate legal entity, and also the types of companies. That's all from us. Thank you for watching.